This is for those of you who are new to trading or you are considering getting started in learning to trade. First thing that I'd like to say is this is a very challenging skill set, so you need to have patience and stick with it. My first tip to you is to have patience. We don't want to lose our initial investment, so we must implement proper risk management. And we will expand on this a bit more further into the video. But right now we're going to take a look at what you need to begin trading, which is a concept called technical analysis. We're going to go through what it is and what it consists of. In its simplest form, technical analysis is using indicators, price action, price patterns, and other charting theory to determine the probability of the direction of price. So price is either going to go up, which is a buy, or down, which is a sell. Now these are just some basic concepts within technical analysis. So we have trends, either uptrends or downtrends. You could look into the Elliott wave theory as well. Consolidations are basically when price is neither moving up or down, it's just going sideways. Therefore, we say the market is consolidating. Now, always remember that the trend is your friend. Always trade a market that is trending. Never trade a market that is consolidating. Further into this series, there's a video dedicated to support and resistance, so you want to be sure to check that out because I think that support and resistance is a must-have in any trading strategy. When you're looking at Japanese candlestick, what they usually tell you is who is in control at that particular time. So either buyers or sellers, so you want to pay special attention to that. Next up, we have price action, which is basically what price has done in the past. That would basically be previous levels of structure. Once you grasp these basic concepts of technical analysis, you can then start demo trading. Demo trading is basically a trading simulation, so the money you would be using is not real. So demo trade up to about a month at most, then start trading with a small live account. It's important to start with a small live account because you want to firstly be consistent and you want to understand how your mind would react to taking an actual loss. Because in demo trading, it's not actually real money that you're trading, so technically your mind doesn't actually treat that as a loss. These are more advanced concepts of technical analysis. We have the Fibonacci tool, moving averages, and indicators. So we have leading and lagging indicators. The key difference is leading indicators will give you too early of an entry when compared to lagging indicators. An example of a lagging indicator is the MACD. So be sure to pay special attention to that when choosing which indicators you'd want to use for your strategy. Next up, we're looking at momentum moves. So you typically see large momentum moves when there's major news releases related to the particular currency pair. ForexFactory.com is the website you'll be using to see when the major news releases are scheduled. You'll see the corresponding pair as well as the time. Advice to traders who are just getting started is not to trade during high impact news releases. So wherever you see those red folders, don't trade that particular currency during that time. Now let's go back to implementing proper risk management. What this is setting a stop loss, and you only want to be risking 1 to 2% of your account, keeping your risk to reward ratio 1 to 1. This means if I'm looking to profit 50 pips, I should set my stop loss to 50 pips as well. Now, if you're interested in learning this skill set, just sign up for my mailing list down below and you'll get access to a ton of free resources that I've put together where you can self-study on how to trade.